Yeah, good morning, everyone. Yeah, we saw yesterday US market correcting, and the US market is now at around 1 month low. We had seen profit booking over there. Uh, the key reasons for decline were Goldman Sachs came up with the numbers, and the results were below expectations. Earlier, we had seen that the other bank like JP Morgan, Citi, whatever BlackRock, all were declaring results, and the share prices were correcting on that account. And now we had seen even Goldman Sachs has reported results below expectation, and the share corrected over 8%. So there again in US, the market is looking at profit booking or some corrections. Apart from that, the bond yield is continue to increase, and now it is at 1.88. So that is also putting up some pressure on the market. Apart from that, in Asia, the futures are marginally down in the US, and Asian markets are mostly down except Hong Kong and China. They are seeing some positive tick, but otherwise all other market are down. On the commodity side, but we are seeing some different trend. Most of the commodities are seeing positive trend today. Oil is nearing to $89. Right now it is at around $88.6. Aluminum is up by around 2%. Copper is flat. Iron ore is up by around 4%. And steel is up by around 3%. All these are in Chinese trading today morning. The key reason for up move in commodity could be there is a restocking of the material before the lunar season, lunar holiday in China, and that's why there is a demand emerging in China. And apart from that, there are expectations that the Chinese government may further ease the policy to support the economy, and because of that, material prices are moving up. And also, in case of steel, even the cost push is quite strong. That is, the coking coal prices now at around $410, and it has moved up from $320 to 410 in last 1 month. So that is also pushing up prices for the metal. So overall seems like we had seen yesterday correction in the market. So we may see some more possibility of corrections, but not like sharper one. There will be demand at the lower end. Now request take up from here.
Yes, thank you, sir. Good morning, all of you. This is Swati. Yesterday, we have seen a sharp dip cuts into the market. Nifty was down by almost 195 points on the closing basis, whereas the Sensex was down by almost 550 points on a downside. Yesterday, we have given an alert that we might witness some selling pressures on the higher side at around 18,350-400 level was the strong resistance we are facing. And the same thing has been yesterday happened that we have seen a deep cut or say the profit booking into the market. Now, looking towards the technical setup, I believe 18,000 will act as a crucial support level. If it's break that level, then this selling pressure is likely to be intensified, which might take a Nifty towards 17,900 to 17,840 levels on the downside. Whereas, whereas on the higher side, 18,170 to 18,200 will be the first resistance zone. Any move above that level on the closing basis, then only we can witness some pullback rally. Otherwise, the view will remain cautious on the Nifty itself. Now we have to just look towards the 18,000 as a strong support level. If it's break that level, then we might going to witness more selling pressures into the market. Coming towards the bank Nifty, yesterday also we have seen a sharp cut into the bank Nifty as well from the higher side of 38,960 levels to 38,300 levels almost. Now the 38,000 will act as a crucial support level. Any move below that level, we expect selling pressure to be continued towards 37,720 to 37,500 levels on the downside. Whereas on the higher side, 38,640 will be the first resistance level. Any move above that level only, we can expect some pullback rally or say the upside rally towards 39,000 levels. So these are the important support and resistance level for Nifty and Bank Nifty. Coming towards the Nifty Finance for today intraday purpose, the support is placed at 18,150. Below that level, 18,000 levels can be seen. Whereas on the higher side, 18,370 and 18,500 levels are the resistance levels for the Nifty Finance. So overall view of the market will be remain cautious but I will just suggest the traders and investors to place the strict stop losses and then hold your long position. That's it from my end. I request Neerav to take a call forward.
Yeah, thank you, Swati. See, yesterday I had mentioned, the data was clearly suggesting that market is likely to, witness some profit booking, and we did see a good fall yesterday. We had given the calls for the same, put buying for the same. We believe now with today's data, more than 20 lakh shares have been booked. So 17,500 put strike had witnessed 40 odd lakh shares addition on the previous day, which has out of which 25 lakh shares have been booked already. But now with the budget coming in, the VIX will continue to go up. It has already reached 17 and a half odd levels and likely to move towards the 20 levels. Now with the VIX moving up, move like yesterday, that moves have to be considered in the next 10 to 12 days, because these moves will continue to come, and you might see a sudden 200 point move on the downside, and an equal move on the upside as well. But the good part is that the liquidation has come in for 17,500 put strike. So now that leaves us with 18,000 put, which has nearly the highest open interest, and it is a very strong support area on the downside. So 18,000, I believe, if not breached, we might remain in range of 18,000 and about 18,200, 18,300 levels. We will continue to suggest even now that booking profits in your profitable positions would be the best thing going forward, at least up till budget, because now there won't be a trending move, at least up till the budget. We have seen already a 1,500 point rally in Nifty, and now it should consolidate. I believe the PCR has gone below 1, which is a good sign. So we might just expect some amount of support buying happening today. And 18,200 is a very strong resistance. So 18,200, if not broken above, we might see selling coming in from those levels as well. So those are the levels. Now from the stock specific front, lot of stocks witnessed selling yesterday. But banking was one sector which held on to its own. Most of the stocks were still positive, and good thing is, selling seems to be over in some of the large cap stocks in banking space, like Axis Bank, HDFC Bank, and ICICI Bank. So these three stocks have to be looked out for. Even after such a fall yesterday, these closed in the positive. That means they have good strength, and some open interest was built up as well. Also, even after a fall yesterday, metals haven't really seen a short built up. So just look out for the metals, because they might just be sharply up in the next 2 or 3 days. Their shorts have been covered in the last expiry, haven't been rolled over here, and not much short built up has been seen in this expiry as well. So they are likely to witness long built up going forward, and are likely to move up going forward as well. Tata Steel seems to be the best bet at this point of time. That's it from my side. I'd like to ask the fundamental team to take over.
Good morning. Bajaj Finance result was above expectation. We saw strong improvement in asset quality. The gross NPA declined to 1.7% versus quarter-on-quarter 2.5%. This is much sharper decline than what we saw in the case of HDFC Bank, where decline was just 10 odd basis points. Credit cost for Q4 is expected to decline to a 12-quarter low at 1.7%. So this will indicate that things are back to normal what they were before COVID. Also, same with ROE. ROE crossed 20% mark for the first time since COVID began. So we feel things are now back on track, and also from the third wave, there is no negative impact on the business until now. Lastly, the phase 1 of a digital platform, or which they refer to as super app, has gone live. It has various aspects that a marketplace app will have, similar kind of all aspects. But Bajaj will focus more on captive customers, as it will be easy to monetize them. So we are positive on Bajaj Finance. It should outperform the markets. ICICI Prudential result was also above estimate. AP grew by 16% and was 7% above expectation, and VNB grew by 20%, both year-on-year basis. So although result is above estimate, but overall, if we see in recent months, the growth has been decelerating, and it is below industry growth for private players. And also the infection rate in the third wave has been high, but mortality rate is very low. So that shouldn't have any negative impact going forward for all life insurance players. So in the short term, don't expect a quick move because of overall a little slowdown in the recent months, but in the longer term, we remain positive. Anup Engineering result declined. Order inflow was weak, and order book declined to 280 crores from 300 crores in September quarter, and 350 crores in a year ago quarter. So order book has been in this range since now more than 2 years at around 280, 300 crore kind of number. So this until this improves, don't expect any further re-rating in the stock. Revenue for the quarter was also soft at 47 crores versus 89 crores in September quarter. Accordingly, profits were also lower. So we are neutral on Anup Engineering. Last result I will discuss is ICICI Securities. The result improved. Revenue increased 10% quarter on quarter, supported by higher investment banking, mainly due to many IPOs which came in Q3. On the core broking and distribution, revenue increased by just 7% quarter on quarter, although it is a respectable number. But if we compare it to other pure flat fee brokers like Angel and 5paisa, it is lower. So in case of Angel, the QOQ growth was 14%. For 5paisa, it was 20%, and just 7% for ICICI. EBITDA growth was decent at 12% quarter on quarter. So overall, we are neutral on the stock. Also, stock is trading at around 18 odd times Q3 annualized earnings, which is closer to the upper end of the historical band. So that's it from my side.
Good morning, everyone. DCM Shriram announced the results yesterday, and results have improved. That is mainly because of the higher revenue in Chlorphenol, Fenesta, and Shriram Farm Solutions. Sugar revenues overall were down. That is mainly because of the lower volumes despite better prices, led by lower monthly releases, because this is a little off season for sugar. The margins have also improved to 21.6% versus 18.7% last year. We are positive on this and expect the positive movement in today's trade. The share is also trading at 17.6 times TTM EPS, which is attractive. Thank you.
Yeah. Good morning, everyone. LTTS has posted its result yesterday. The company has posted inline set of numbers for the quarter, with CC Q on Q growth coming in at 4.2%. EBIT margin came at 18.6% versus QOQ of 18.4%. Management indicates 18% EBIT margin is sustainable over a long term, and costs like wage hike and travel costs will be offset by operational efficiency. Overall, company continue to see healthy demand environment across segments and indicates pipeline is strong, and maintain its FY22 USD revenue growth guidance of 19 to 20%. In short term, the company may see stock price may see some correction as Q on Q growth came marginally lower versus most of the companies reported higher than expected growth. Outlook is neutral. Just Dial posted okay set of numbers for the quarter with unearned revenue coming in at 325 crores versus 334.2 crores. EBITDA margins was impacted and came at 3.3% versus QOQ of 10.2%, which was majorly due to higher other expenses due to higher advertisement cost of rupees 50 crore. Tata Elxsi has posted improved set of numbers for the quarter. Other than this, AGS transaction IPO is opening today, and the issue price is 166 to 175. The IPO is an offer for sale of rupees 680 crores, majorly by the promoter shareholder. The company is majorly a cash management company, and over FY19 to 21, the company sales had dipped by at a CAGR of 1.3%. The number of ATMs between FY22 to 26 is expected to grow at a CAGR of 1.7%. With Digital India campaign launched by Government of India, we feel cash movement in the country is likely to slow down further, which might impact the company. Debt for the company stands at rupees 1233 crores and ROE at 9.8%. At upper price band of rupees 175, AGS is offered at a PE of 47.3 times FY21 EPS, which we feel is expensive. We recommend avoid to the issue. Thank you.
Results for Raj Rayon, sorry, for two results also. Rajratan Global has reported numbers, and numbers were more of a flattish quarter on quarter. Small volume decline from 23,000 ton to 21,500 tons was seen in this quarter because of the lower capacity which company is higher capacity utilization which company is doing. Right now, company is running at almost 100% capacity and do not expect any volume much growth in even Q4 also. There could be around 24,000 ton volume in the Q4. But the capacity expansion in their Thailand plant is coming towards the end of third quarter and end of the fourth quarter, so that will have a positive impact in the first quarter thereafter. And the larger capacity in India is expected to come up in a year's time, so that will give a bigger booster to the company in coming period. Share prices has moved up in the recent past from around 2000 level to almost 2700. So any good correction can be used to buy this stock from a long-term perspective. Then results for Saturday. Saturday, ICICI Bank is expected to report numbers, and numbers are likely to be good. NII is expected to grow by around 22% year on year, and PAT is also expected to grow by around 20%. And provisioning is also likely to come down, and slippage is also expected at around 4,400 versus 5,500 last quarter. So overall, seems like ICICI Bank is likely to continue its positive momentum in the results as was seen in the last quarter as well. So share is trading at around 3.1 time price to adjusted book on a trailing basis. Apart from that, Yes Bank is likely to report numbers, and numbers are likely to be more of a flattish quarter on quarter, or may see some marginal dip also on account of higher provisioning. Then results for Monday, that is coming Monday. Burger King is likely to report numbers, and likely numbers are likely to show improvement both quarter on quarter and year on year. Sales is likely to grow by almost around 60% year on year and 7% quarter on quarter. And margins are also likely to expand from 10.4% to 13% quarter on quarter. So the results are likely to be positive for Burger King. Then Deepak Nitrite is likely to report numbers, and numbers are likely to remain more of a flattish quarter on quarter, though margin may see some up move of around 100 basis point from 23% to 24%. Revenue is likely to remain flattish quarter on quarter. So nothing so great improvement in results from quarter on quarter. And year on year, the margins are likely to see some dip, as last year the margins were quite high. Then HDFC Asset Management is likely to report number, and here again the results are likely to be more of a okay set of number. Revenue is likely to grow by 15% year on year and 12% EBITDA increase expected. Margins are likely to remain more of a stable margins. Then IEX, that is India Energy Exchange, is likely to report number. The numbers are likely to show good improvement, mainly on account of growth. Margins are likely to remain stable. Revenue is likely to grow by around 36% year on year and 6% quarter on quarter. And EBITDA margins are likely to remain stable at around 87.5%. India Mart is likely to report improved set of numbers. Quarter on quarter revenue is likely to increase by around 9%, and margins are also likely to improve from 45.6 to 47%. Then Music Broadcasting, that is a radio company which is likely to report numbers, and numbers are likely to show good improvement. This is seasonally a good quarter for music companies or radio companies, wherein revenues are likely to grow by around 50% and EBITDA margins are likely to improve substantially in this quarter. Then Ramco Cement is likely to report numbers, and numbers are likely to be more of a declining, in the sense on the EBITDA per ton, volumes are expected to increase by around 5% year on year and 2% quarter on quarter, and sales are expected to increase by around 10% year on year and remain flattish quarter on quarter. EBITDA per ton quarter on quarter is likely to decline by around 185 rupees on account of increased cost and more of a stable realization quarter on quarter. And also year on year, the EBITDA per ton is likely to decline by around 250 rupees. Sudarshan Chemical is likely to report number, and numbers are likely to be more of an okay set of number. Gensar Technology is likely to report numbers, and numbers are expected to be indicating some declining. Revenue is likely to grow by around 3.5% year on year in quarter on quarter in dollar terms, but margins are expected to come off from 15.3% in last quarter to around 13.8% in this quarter. Apart from that, Axis Bank is likely to report numbers, and numbers are likely to be more of okay, wherein NII, that is net interest income, is likely to grow by around 11%, and profit before provision is also likely to grow by around 10%. Provisions are likely to come off year on year, but likely to remain stable quarter on quarter at around 1,800 crores. And as such, profit year on year is showing good improvement, as the last year the provisioning was quite high, but quarter on quarter the profitability is likely to remain stable. So more of a stable set of number. Slippages are expected to come off in this quarter, as is the trend for all other banks. 5,400 was the last quarter slippage, and this is expected at around 3,800 in this quarter. SBI Card is likely to report number. Here the total revenue is likely to grow by around 20%, and also profit before provisioning is also likely to reflect the same at around 20% growth. Provisions are likely to come off quarter on quarter from around 600 crore to 500 crores, and as such, PAT is likely to show improvement both quarter on quarter and year on year. So result is likely to show improvement, but SBI is facing some regulatory uncertainty on account of the RBI is coming up with is expected to come up with a regulation which is likely to reduce their earning from in the coming period. And Shriram Transport is likely to report flattish set of numbers. And so that's all from us. Thank you very much and have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.